Reserve Bank met for its March meeting, and to the surprise of many commentators, interest rates were cut this month. To understand what was behind this and the thinking of the Reserve Bank, let's have a chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Welcome, Andrew.
Thank you, Michael.
Well, last week you were amongst the first people to come out there and say an interest rate cut was looming. What were the concerns of the Reserve Bank today?
To some degree, I don't think it was a surprise, Michael. There were others that were also promoting the possibility of a rate cut, but certainly the parameters we do view in terms of rates moving up and down moved clearly in favour of a rate cut from what had been a position of sitting on their hands, I guess, a wait and see approach from the Reserve Bank this year, which seemed to be the general attitude until we did get some clear changes in the data that has come through over the past week or so. And that, of course, was poorer jobless data, some, again, disappointing wages growth data, and the elephant in the room is the coronavirus.
Sure, well, the coronavirus is big news, and it seems to be getting bigger, Andrew, and there seem to be so many angles to the story. But whether it's actually going to turn to a major pandemic or just another run-of-the-mill frightening event that's going to fade to obscurity, currently it does seem to be creating some economic upheavals. I think investors should be aware of it. So what are the potential consequences if this keeps rolling on?
Well, certainly the export trade is potentially impacted, Michael. And of course, we do have clear linkages, strong linkages with China, the students, tourism. Of course, supply chain networks can be disrupted as well. However, the rate of infection is declining now in China. So I guess that's a positive sign. But I guess the Reserve Bank, again, has decided to act sooner rather than later. And perhaps that's a wise move.
Well, the share market's also reflecting business confidence or lack of it with the coronavirus. And I know retailers and others are concerned in certain geographic locations in Australia where there's a large Asian community. Okay, so interest rates have now dropped further. What are the impacts? How's that going to affect us moving forward?
Well, it's a positive for confidence, of course, Michael. It does improve the bottom line for consumers and businesses by reducing borrowing costs. The negatives, of course, are for savers because it does reduce deposit rates. But we're getting to the bottom now of the interest rate cycle, regardless of circumstances. Reserve Bank has indicated it won't move below 0.25%. And that means that we've really only got one cut left now. And I guess that's the emergency level cut. So look, I think that the actual impacts won't be as strong because banks will be constrained for passing on the full 0.25% reduction, but it is a fillip for confidence. And of course, the other point we should make is that it'll put downward pressure on the Australian dollar, which is good news for exporters.
Well, clearly the Reserve Bank wasn't too concerned about our strong property markets. On previous occasions, they were concerned that lowering interest rates could even further boost these, particularly the Sydney and Melbourne markets.
Oh, there's no doubt that lower interest rates are positive for housing markets, which are certainly up and about at the moment, particularly Sydney and Melbourne. I guess the Reserve Bank, which in my opinion has had a little bit too much focus on housing market activity over the past few years, has decided that the bigger picture, the macroeconomic picture, is of more concern. And I think that they've put any concerns they have on the back burner in terms of house price growth.
Well, I guess the Reserve Bank has decided to grease the wheels of industry since we're not getting stimulation from the government. Maybe we're going to have to wait till the May budget for that to occur. So thank you, Andrew. That's the thinking behind the Reserve Bank's decision to lower interest rates today. We'll have a look next month and see what they do then.
Thank you, Michael.